with where they're at right now.
Here, let's get rocking here. It's another show, busy morning here, busy day of earnings yesterday. It's October 21st, Rolland Market Mashup. And just to start the show, we were talking about Netflix, so let's dive right into it. They're probably the biggest company that reported earnings yesterday. They had a beat on revenue, but a big slowdown in users. I think they were well under what the expectations were. I think the expectations were over 3 million users, and they were a little over 2 million new users. And, you know, there's talks that they're going to be increasing pricing, which I think is really all that people seem to think that Netflix could do moving forward. And, you know, there's some reputable people out there that are kind of saying that the growth story with Netflix is over and there's not much they could really do as a company to evolve. They obviously have a great company, a ton of users, and they'll continue to probably jack up the prices. But Netflix is under a little pressure today. But then there's people on the other side that are saying anytime there's weakness in Netflix, this is a great opportunity. Stock's up over 2,000% since the FANG phrase got coined, which was, I think, in like 2013. So it's actually been the biggest gainer out of the FANG group, which is Facebook, Amazon, Netflix, and Alphabet. So anything that stuck out to you guys with their earnings yesterday, or are you?
I don't think they'll be the biggest earner in the years ahead with FANG. That what stuck out to me is, like we just talked about offline, their shelf life is they have a lot more competition now. And how are they evolving their business? Their current model, it's hard to fathom. They're going to have to figure out something else beyond just upcharging people monthly for watching content that they have 4 big competitors with now. So I look at it, though, like the old cable days. You know, people have stopped paying for cable for the most part. Now it's all streaming. So it's not like people can't afford it. It's more, what are they offering? I haven't been impressed lately with Netflix. I'm obviously a subscriber, but I don't love what they've been churning out for months. I think it's been subpar at best. So I'm not saying they're running out of content. It's just legit content, and how much money they even had to pay for The Irishman to roll that out. I'm not really loving that. What do you guys think?
Well, you know, I look at you got to start looking at the PE ratio on a company like this, or the price to sales. And the forward PE on Netflix, if they hit their numbers next quarter, is about 61. So that basically means this company's got to grow over 60% just to stay even with the stock price, right? And if they don't, then it's trading too high. So if you get a quarter where you're not doing that well, it changes the dynamics of how people look at this. And you get rid of those momentum guys, and it takes a long time for them to get out of a stock. That was their big thing. Big growth. Does it have any big growth left in it? That's the question.
I'd say the biggest room for growth for Netflix, and I don't know too much about how the economics around this plan play out, but it seems like there's more and more movies that are going to go direct to consumer instead of coming out in theaters. And I don't know who's the beneficiary of that, if it's the consumer or if Netflix, collects large premiums if a movie goes straight to Netflix and skips over the theater process.
Or the winner there is the director of the movies when you think about it.
No, and that's just where I'm not sure if that's actually a benefit for Netflix or not. But
I don't see how it is when you look at the premium. Because Dan, they're in a bidding war now that they didn't used to have to be in when we think about it.
No, definitely, and you're right. And so here's what I did. So I own Netflix, unfortunately, at around $5.60.
Do you own a lot of it?
Not too much, but I kind of had a feeling that yesterday was going to happen with their earnings. And what I did was I sold $560 strike covered call options for $10 a share that expire this Friday, which is a nice $10 a share premium that'll go in my pocket because obviously Netflix is not going to close above $5.60 on Friday. And even if they did close above $5.60, I would have then sold the stock and had the $10 premium. So I would have basically broken even on the stock, but collected the $10 per share premium if they did rally on earnings. And because they're not, I'm at least getting the $10 per share premium. And I think what my plan,
it's a nice insurance policy.
yeah, and I think what my plan is going to be moving forward with Netflix, because, you know, long term, they are still, like Dad was saying this morning, at least for now, in an upward trend. So I think I'll continue to sell those covered call options either every Friday or every other Friday until the stock works its way back up. And when it does, I'm happy to possibly get out at one point. If not, I'm happy to own the shares and collect the premiums on the covered call options while the stock is just potentially dead money for a while. And, you know, I know I was talking about that a little bit yesterday. I did the same thing with DraftKings, which I bought too soon. I'm in long at DraftKings at 51. Obviously, that stock has continued to slide, and they're up a little this morning. We'll see what happens. There's obviously a lot of insider selling. They're at about 43 this morning. But similar thing, the premiums on the call options for DraftKings are so big that what I did was I went into the $50 range and sold covered calls at $50 for, again, I'm going to look to do it each Friday, collect 50 cents per share on each share as the premium. And if it gets to 50, I'm happy to sell it anyway, because at that point, not only am I getting back to where I got it anyway, but then I'm collecting the 50 cents per share, which is the profit I want on that stock anyway. So the covered call option, I know I just started talking about it a little over the last.
Why don't you showcase, Dan, for our viewers? Because I think I've even had a couple one-off comments where people are a little confused with some of this stuff.
So it's tough to showcase just because options are not something that happen during extended hours. So right now, if I were to pull up the spreads, it's all.
But more, just give an example of any stock with a price and what a covered call option means with a buy or sell.
Yeah. So when you buy a call option, I mean, Dad, why don't you break it down, because you'll probably be able to break it down in a much simpler way than what.
Yeah, we'll use DKNG. You could see if you have access where the options closed yesterday. But basically with options, there's calls and puts. Calls are an option to buy the stock at a certain level. And usually what they do is they issue options that expire weekly, and they're every dollar if a stock is around 50. If it's, you know, a very high stock price, it might be a $2.50 spread or a $5 spread. But for this purpose, take DraftKings. Every dollar you could see as an option strike. So Danny is doing the 50s. So the calls right now are trading, they close 15 cents to 20 cents. They expire Friday. So if you sold the calls right now, you would be getting 15 cents. And that's giving someone the option to buy your stock at $50 on Friday. So someone is willing to take that risk that DraftKings is going to close above 50, and that'll make you a ton of money if you're right, if you buy that option.
So the other party, to clarify that, they're getting a huge premium for gambling on that.
You're getting a premium for selling them the option. They are taking the gamble.
Yeah, that's what I'm saying.
Yeah, because they're looking to buy it at 50 and if it goes to 51 on Friday, that option is worth $1, the difference between 50 and 51. And they bought it at 15, and they're selling it at $1 that day.
So they made 75 cents.
80.
That's why you'll see people going into options, like going into earnings, where they're really like, you know, the Leon play where he'll buy calls going into earnings.
That's right.
Expecting an earnings beat, and then that makes a fortune.
And the opposite of that is the other side, the puts. And a put is basically an option to sell the stock, right? It's just the opposite of a call. So just think complete opposite, and it does the same thing you're betting on the stock going down if you buy a put. And if you're offering someone a chance to buy a put, you're willing to buy that premium, to buy the stock at a lower price or whatever price you
And
set.
we've talked about this with our viewers before, where Dan and I, when we first got into investing, were big on selling puts for like months out many times, that banking on it going way up, because the premiums on those, especially if you time it right, on a bad day in the market for that stock, you can really play it very well. And I haven't done that personally in a while, but would like
it's a little riskier than the call option thing. What's great about the call option thing is, and don't get me wrong, there's two different situations. One is if you have a long-term position and you're selling calls against it, what's likely to happen at some point is you're going to eventually have that big blow out of the water move where you sell your stock, you collect your gain, you collect your profit, but you ultimately miss out on the big move. But if your strategy, which Mike, you and I seem to do this a decent amount, if part of our trading strategy is holding swing trades, and we look at it like we're getting in a stock, we're looking to hold it for a short amount of time anyway, maybe for a 10-point move, then the whole idea of selling call options against the position is amazing, because you could also trade in and out of the option. So I'm looking this morning, and I opened up a few of them yesterday on swing positions that I have. All of them now are nicely in the money. And the great thing about it is, if for whatever reason I decide that I don't want to actually get out of these swing positions, I can close out of the option trades for profit immediately. Like I'm looking at DraftKings yesterday. I'm looking at Penn. I'm looking at Fastly. Mike, GameStop is one that, because of the volatility, has really expensive options. So yesterday I actually was watching GameStop, and this is the most risky one that I have, but I went long GameStop at 13.88, and I went and looked at the call options at 14.50, and they pay 50 cents a share. So I look at it like, obviously the risk is GameStop has been a super high flying stock, and there's that chance that it starts to retrace itself. But if it doesn't, and somehow it continues to move up, I can collect the 50 cents plus another 50 cents on the premium of the call option. And this is this Friday. So if for whatever reason GameStop does end up getting to 14.50 by this Friday, I'm making $1 per share on that trade. And if it closes right around where it is right now come this Friday, I'm still collecting 50 cents per share, which for GameStop is massive. That's a few percent per share. And I'm looking now, and GameStop is right around where I bought them yesterday. And the option is already up $500. Obviously, I shouldn't say $500. I should say the amount it's up per share, because it depends on how many shares you have. But it's a strategy that is, I think, really, really good if you're already doing swing trading. So I'm starting to look more at them right now.
It's something you should definitely be looking at. And, you know, you take DraftKings. The main thing with options is time value. So the further out you go, the more expensive the options become, because it's got a better chance to get to that strike price and higher. So if you just go out a month to November 20th on DraftKings and look at the same 50s, you're able to buy those options cost $2.90 at the close. And you're able to sell someone an option to buy that stock at 50, and it's good for a month. And that would be getting out of the stock at 52.90. If you're in now at 43, you got to say to yourself, that's a nice risk. You know, you basically are collecting $2.90 a share. And if the stock goes up to 52.90, that's your out, basically.
Which means if you got the stock at these levels, you're collecting $10 per share, which is massive.
Right. You could buy, let's say you buy 100 shares of DraftKings today at 43, and then you sell the options immediately at 290.
You're looking at a $10 per share gain. If
right.
and
you're in on the stock. The other way to look at it is you basically are getting $2.90 off the price of your stock.
Yeah,
that's how, you know, the options work. It's a beautiful thing for those that can afford to buy stock, The options are as high as they are because there's so many people that are willing to take a bet on the same stock, and they give you that opportunity, which is usually, lately these are overvalued options when you look at the volatility of the stock versus time value. So
and not always, and that kind of brings me into the next stock here. And for the first time ever on this show, I'm going to get myself a pat on the back because I've been talking up Snapchat ever since they were at $22, and they had quite the impressive quarter yesterday. Just a big beat all around, massive growth in users. They got advertisers starting to use their platform, which we knew was going to happen because we're one of them. And yeah, their stock is getting a nice look here pre-market.
Plus, they got an upgrade. At least they'll probably get 3 or 4.
Yeah, so they got over $35 last night. It wouldn't shock me if you see that again today. I mean, you might even, let's remember when Pinterest had their blowout quarter last quarter, they were up 40%. And Pinterest is actually also up huge today. I think it's just people are going to assume that they're also going to kill it. But Snapchat, I was doing the same thing where yesterday I was looking at the value on the options, and to me, they were just too cheap, where it almost seems like it wasn't worth it. And I was looking at possibly selling options at $30, which would have meant that I was out of this stock $5 ago. And instead of this 25% move today, for me, it would have only been 5. And that's where I'm happy I didn't do that. But that's the other side of options. If you do it to an extent, you're limiting your upside. But if you're in a swing trade and you're already putting a target on a price, then you're already limiting your upside because you're already planning on getting out when that price hits. So it's a nice way to make some extra money. There's no doubt about it. And yeah,
Facebook's acting well too because of that.
And Twitter.
Yeah, Facebook is up, about 13 points right now?
Yeah,
over 280.
They started going off yesterday as soon as Snapchat reported their earnings. It was so that's what we got there. And it's going to be an interesting day because, look, each day they keep taking market participants for fools when it comes to this stimulus package and saying how it's finally the deadline, and then it's like, no, wait, we just said that it was the deadline for just having talks. They're kind of just fiddling their thumbs and not getting anything done, but they're keeping the narrative alive, which keeps the market alive, unless the market isn't actually trading off of those headlines at all.
It's hard to believe the market believes that they're going to be able to get it done. I mean, the way McConnell talks, it doesn't seem likely unless, I'm completely missing what's going on, which could easily be.
Yeah, these politicians are all full of shit. They don't actually say what they mean ever.
Yeah.
But it's going to be interesting to just see what happens with the market here over the next couple of weeks because we're 2 weeks out from the election. Tomorrow night we have the debate. It seems like the polls are switching by the minute. And, one thing, Dad, that I know we've been talking about on here is a potential Zoom short, and I've just been following their stock. And yesterday, it kind of maybe had that midday reversal where I wonder if the short's now on. I mean, if you look at what happened yesterday in that chart, let me actually pull it up here.
It's still a major uptrend, even with as much.
Yeah, I would be careful shorting this stock because I've been hearing too many people, even that I've talked to on these hangouts, how they're even the guy yesterday on our podcast, how Zoom's going to be a big part of their business heading forward. It's tough because I think people are looking at communication differently heading forward now.
Well, at the end of the day, the company can do well, like we said, and the stock can stop doing well. And if you look at Zoom's,
I got the chart pulled up here, and
I mean, the chart looks spectacular, and you can't get anything off of that chart to tell you that it's going down yet. But if you look at their numbers, I'm trying to see where this company, let's see here. Here's where it is. Their PE ratio, we were talking about Netflix before, is the current is 719 to 1.
Yeah, and I'll tell you,
forward is 175.
Not only do I know for a fact, just off of talking to some friends who, work in the security space, there are some certain huge companies that are using some of the other services available, like Microsoft Teams and not Zoom. But even the other day, seeing when I got on the call with the Boulder Town about the bid, it was Microsoft Teams, not Zoom. There's starting to be more Microsoft Teams getting thrown in the mix. And all it takes is the tiniest bump in the road for Zoom on a call to just show that they're not quite as big. Not, I don't want to say it quite as big, but that there's the perception out there that people are using the other platforms, and look out below. That's all.
Yeah, I mean, absolutely. I mean, any value investor looking at these numbers would be completely away from this stock. Price to sales 125. It's crazy. I mean, these are numbers that short sellers salivate over. But having said that, they've gotten wiped out time and time again here. So this may be the time, but it may not be.
Just watching this, never even heard of them, but PLIN, which is some China food distribution company. So I like run this thing in the mornings on E-Trade Pro that'll basically shoot out stock charts that double top pre-market of these like stocks that are up 80 to 100% off of whether there's an announcement or no announcement. I can't find one yet for them. And it'll show you if the stock double tops, which sometimes means that it's heading for a reversal. And this stock did that at like $1.98 this morning. It's traded all the way down to $1.31. Unfortunately, I just did not catch it in time, but it would have been. These are happening every morning. I know we talk about them sometimes, but every morning there's a dozen stocks that are getting these parabolic up to 200% moves.
Yeah, there's another one today. ASTC is up 147%. I mean, the list just came in from the Canadian boys. And PLIN is up 93%.
Yeah, PLIN's another one that I'm
looking at. Did you say
at.
MRIN, Dan? Was that the one you mentioned? That's
no. PLIN was the one I was talking about.
Oh, okay, yeah.
Yeah, that's the Chinese food distribution company.
This MRIN was up 500% at one point today. Now it's up less, but it's still like more than doubled overnight.
Yeah, the volume in these stocks pre-market is ridiculous, to say the least.
And not surprising, Hertz is now well under $2, heading back towards $1. I mean, that was so predictable. It's just so difficult to play those names on the short side because there's so many individual investors that jump on these stories.
And, speaking of penny stocks, Mike, you've been crushing it with your MMEDF stock, which is the mushroom psychedelic company that Mr. Wonderful is behind. That broke through $1. That's at $1.10 now. And
that's just starting.
Well, yeah, I'm seeing it now at $1.03 to $1.04, but I think part of the move there is Mr. Wonderful is going to be on the show, the Canadian show on Friday. And he'll probably.
I don't think that has anything to do with that. I mean, that stock's been trending.
It's just where it's the future of mental health, as we've been bringing up numerous times. I got him at 42 cents. You could stay on the sidelines till it's at $10, 50. It's going to keep going up like Bitcoin, which is now over 12.
Yeah, we have to mention Bitcoin today. Mike is right on Bitcoin. It's up right now, almost 4.5%. Testing the highs from a couple of weeks ago or a couple of months.
Shout out to all the hodlers out there.
What's up?
I said shout out to all the hodlers out there. That's what the Bitcoin holders are, hodlers.
Yeah, that makes sense.
Mike, another stock that you're big on that's seeing a nice look this morning is Ericsson Technology. They're up over 8% pre-market. Let's see what the news is.
I don't think there's any news. Did their earnings come out? Yeah, their earnings.
Yeah, they did. And, good profits.
Who is this?
Ericsson.
Oh, yeah.
Yeah, their earnings beat by
of course they beat.
Less than 2 cents.
This China distrust in the world is they're a winner. This is
Astra Tech company, Dad. The ASTC company was up to $7 this morning.
What is that?
That was last night actually, and now it's down to 4.5. Unbelievable. But
These stocks are crazy the way they move around.
And I think
Yeah.
Beyond Meat's interesting to look at these levels. I'm going to be buying more of that today. It's impossible not to. I don't care what people think about the charts. The reality is this was trading at 240 last summer, and it's on a whole nother stratosphere of growth right now than last year. So
even at where it was trading last summer, they were predicting all this stuff, right?
yeah, I know, but it's already come to fruition. They were predicting things that have happened and then some. I'm loving it here.
Yeah, it's just the same problem to me.
That there's certain things you got to just throw the charts in the water because they're irrelevant with certain
well, I think
companies.
where Dad's kind of right, and where I'm a little hesitant, not just with Beyond Meat, but a lot of these high flyers, is the market's been choppy, and we haven't really seen like that major flush out that is always around the corner. Like it's been kind of close to that.
I know, but they're not a stock that at all is parallel with flush outs.
I
So
mean,
when you look
I
at
just said, we haven't seen one.
Mike, the stock is up from 50.
what does that matter? Let me ask you this, Dad. In India, with how many vegetarians there are, with where that country's heading, explain to me how Beyond Meat is not going to be a major winner. Yesterday, they're down on it. Positive news for their competitor.
I don't think that's
what
what
validates the space more.
Yeah, but you know what? Indians don't have a taste for meat, so they don't want to eat something that tastes like meat.
No, listen, I don't think the growth story but with Beyond Meat is at all to question. I think it's more, the market has been just in these technical ranges, and even though there's been days where it feels ugly, there's yet to be like a real take the carpet out from underneath some of these stocks. And that's just a name where if that happens, it's not crazy to see them come all the way back down to like 135 just off of like a
no
big
chance,
man.
man.
The market.
No chance. They're not flushing out on bad days. If you look the last year in the market and how the S&P on days that shit the bed, Beyond has been even or up. It's been a Zillow type of situation and then some. It really reminds me of Tesla in its early innings. It really does. It wouldn't shock me if this is $1,000 stock in a few years where everyone's like, oh man, how did I not get on that movement?
Yeah, I mean, you might be right. And
here's the Beyond Meat numbers, just to give you an example. The trailing PE is 700 to 1. The forward is 333. So they've got to grow it. Just a tremendous.
Yeah, which they're going to, Dad. Look at the market.
Well,
not well. It's facts. It's people eat a ton of food. I know like big meat eaters that have converted to Beyond.
Yeah, for comparison, what's USFD's PE?
Well, it's a different kind of
situation. I know, but just to kind of compare it to like another company that's in the food distribution space, even though I know they're night and day as far as.
Yeah, they're not they're like oatmeal compared
USFD is trailing PE is 25. Forward is 13.5. Price to sales like 0.222.
Yeah, it's USFD.
Obviously,
that's a value stock right there.
The historic like market gurus, and this doesn't. Most of the people who go off of this missed out on like the big tech rally, but most people like won't touch stocks if they're too far above 15, and
usually they're not getting huge returns. That's the problem there. If you're going off these market gurus, you're not really getting paid.
No, I mean, it's been a disaster for value investors so far because they look at price to sales, they look at all these numbers, and they can't get their arms wrapped around these growth stories.
The key is you've got to be ahead of a narrative that you believe in with conviction of being a user of something. It's like if you eat Beyond Meat and you actually like it and you believe in what it's doing for the environment, it's just like the same with cryptocurrency, psychedelic stocks, anything, 5G. Find a narrative to get in front of. Screw the charts. If you actually believe in it, roll with it.
Yeah, no, for sure. And just because I know we're out of time here, but just to throw out a couple pre-market movers this morning that we don't necessarily talk about all the time. iRobot had their earnings and it was a beat, but they're selling off pre-market. That'll be an interesting one to watch. We never talk about them, but they're at $92 a share. What was that?
Will Smith's company?
NKLA, Nikola.
Yeah, Nikola GM came out this morning and said that they're excited about the partnership with Nikola. I haven't even looked at the stock.
So what is Nikola up like 300% now?
They're up
Up
8%.
$2, less than $2.
Yeah, and Eli Lilly they hired an outside advisor to review their plant that they had apparently a bunch of issues for in the Food and Drug Administration. That's one of their experimental C19 treatments. We already talked about Snap, Texas Instrument, big beat, Netflix miss, Winnebago, big beat.
Chipotle is today, right?
I'm not sure. I haven't looked at what's today. I'm just going over.
I think Chipotle earnings are today.
And then Verizon was the other one with the beat. Same with AutoNation. So all I'm seeing is that most companies seem to be beating their estimates, but that seems to also be kind of a layup considering they're coming off of one of the worst quarters in history due to the pandemic. So keep that in mind. And
earnings are today for Chipotle.
Awesome. Follow us, subscribe, Rolland Market Mashup, make some money. We'll see you tomorrow.
And futures are looking flat right now. Damn, they've come down a lot since where they started this morning.
So, yeah, we were up early, pretty big. You're over 35 on Snap now.
It's amazing. I'm not selling it.
Well, I mean,